Martin Turner here. This week, Maria Tyler leads the lecture as we look at restating our firm's income statement, discussing commonly asked questions and tips on restating our firm's income statement. Maria also reminds us about the popular videos in the video section on the right-hand side of Moodle, where Maria takes us through step by step how she restates each of the financial statements for her firm, Wesfarmers. Maria starts with reminding us about the purpose of restating financial statements in our unit. That is, to become more familiar with each item in our firm's financial statements and to help us to link cells between worksheets in Excel.
Okay, so this week we're finishing off our last look at analysing financial statements, and we're going to focus on restating the income statement. Well, the tips and hints about that. But first we will cover a few background details as well. Okay, so this is our third week looking at analysing financial statements. So we'll go through just a quick reminder about the purpose of restating in our unit, as opposed to some of your companies having restated some of their figures. We'll cover some common questions so far, and we'll go through the tips for restating the income statements, and we'll finish off with the minute paper. Now, I'm just going to warn you, in here, we do cover a recap of comprehensive income. So remember in week 5, I asked the teaching team to help me out with explaining to you their different perspectives of comprehensive income, because my very basic explanation sometimes doesn't cut it. So in the meantime, you've had 2 weeks now to think about the concept of comprehensive income, and a lot of you have actually started to restate and come across your items of comprehensive income. So we'd like you, well, I would like you, and I'm going to ask you to share with me, we'll share with everybody, your thoughts about what comprehensive income is. So there's a little interactive component in today's slides about asking you what your thoughts are. If I was to ask you to explain comprehensive income back to me, how would you explain it? So I'd like you to think about that before we get there. And I'll also invite the teaching team to provide their explanations again. Somebody's got their microphone on. I can hear. Just everybody, if you could please make sure that you're muted. I could hear, it sounded like a little kid in the background. I'll just quickly show you where to go to the slides. So on our main Moodle site, if you scroll down, I will need you to open the slides, because we do have a few interactive components today. Scroll down until you see week 7. Click into week 7, and then click into Echo 360 week 7 lecture slides. When you click that, it'll pop up with a little window that says your activity has opened in a new window, but it hasn't. There's a little link underneath that says open in a new window. So just click on that link. So I need you to get into the slides and follow along with me today, please. All right, so back to our slides. So just again, a reminder about the restating that we do in our unit. It's not so much about you guys learning to restate. It's a lot more about forcing you to become familiar with financial statements, so general purpose financial statements, and also learning to use Excel. And again, how in depth you go into that learning journey is purely your individual decision. Now, some students really go quite advanced into Excel, which is great, because if you learn it here, you'll have more skills when you come out into the real world. If you just do the very basic in Excel, again, that's going to be reflected in the skills that you leave university with. So please take the time to investigate how formulas work, to use them in your assignments. We show you very basic formulas in the videos that I work with Excel. The Excel techniques that I show you are very basic, and it's something that's definitely, if you say you've got Excel skills in the real world, they would expect you to have all of those. The different techniques I work with in Excel, that's considered as a very minimum and basic requirements for using Excel. In practice, it gets a lot more complicated than that in roles. So please take the time, become familiar with your financial statements. If there are scary sounding items, take the time to investigate them now. That's why we're exposing you to all these terms, these weird and wonderful terminologies in your general purpose financials, things like derivatives, provisions, deferred tax liabilities, and so forth, because we want you to make sense of those sorts of things here at uni, where you've got a supportive network of peers. So don't be scared of them. You have to actually know what they are in order to be able to restate. You have to know what they are in order to classify them as O and F. So take the time to become familiar with your financial statements now. Okay, so I'll just go through a few general questions I've also had from students. So I only have one income statement. Where's my other one? One of the big feedbacks in marking assignment one I had was you've only entered one income statement, or you've forgotten your income statements. If you've only entered one income statement, you usually have accidentally left out your comprehensive income statement, okay? So if you only have one income statement, it means that your company has combined their profit and loss statement with their statement of comprehensive income. They've combined them into one statement. So when I showed you Wesfarmers, I'll just pull up the most recent Wesfarmers annual report. Let's scroll down till we find, there we are, the financial statements. So you'll see Wesfarmers has two separate statements. They have an income statement, and then they have a statement of comprehensive income, okay? Now, not all of your companies will have two statements, and that was what the question said to me, was asking. They were saying, I only have one, so where's my other one? Your Wesfarmers one has two. If your company only has one, that just means they've combined those two statements into one. So see how Wesfarmers has finished here with a profit line, this one here, profit attributable to members of the parent, the 5510. That just means they've started with that line, the 5510, with their statement of comprehensive income. So if your company hasn't done that, if they've combined it, they won't need this additional line here. They will simply just continue on with the rest of this statement plonked right underneath here. Okay, so if your company only has one income statement, it has already combined the two into one. You can make sure that you can check that, usually by the terms that are used in that income statement as well. Instead of saying a total profit or loss, it will say total comprehensive income. And that's what you need. You need to get to your total comprehensive income. Okay, what do the little brackets around the numbers mean? Well, they can mean a few things. Most of the time it just means it's a negative or an outgoing or an expense, okay? But not necessarily. Some balance sheets use the brackets to represent credits. Okay, so just because you've got little brackets around your numbers doesn't necessarily mean that it's a negative, although most of the time it does mean that. You'll need to get to know your financial statements and how your company is presenting those financial statements individually, because it can mean different things for different companies. So I used to just say little brackets around your numbers means negative, but I have come across financial statements where it doesn't. It actually just stands for a credit, or it stands for the opposite of how your company is presenting other figures. Okay, so it's really important to get to know what's a total and what's a heading. And so I've had students say, well, that's all good for you to say. How do I know that? And I say, well, get out your calculator and start adding and subtracting some of the numbers to get to the totals in your income statements. So get out your calculator and start logically looking at your financial statements and saying, okay, well, this says revenue. So what do I know about revenue we've covered in the unit? It's income coming in, so it's positive. So Wesfarmers is showing that as positive, so I agree with that. Now I've got brackets around these numbers, and they're all listed on the heading expenses. So again, I know expenses are outgoings, so they'll be opposite to revenue. So I'm thinking if I take these brackets away from my positive figure, I should get a total. Okay, so I'm going to check that. So I'd put in my calculator, you know, my revenue minus my total expenses plus my other income, because it's positive, it's not in brackets. So I'm checking how Wesfarmers has entered these financials. So this is me getting to know my company. So I'll start with, you know, the 27,920 minus the negative figures, then add the positive figures and check, do I get this total? And if I do, then I know that the brackets in my financial statements mean negative for this particular income statement. Okay, so that's what I'm saying to you. You need to actually spend the time, start thinking logically and looking at the terms that your company is using for their various items and trying to make sense of them, because then and only then will you start on your active learning journey. So if I'm sitting here looking at your financials, telling you what they are, chances are you will never ever remember what I've said. So this is what we're saying to you. What do the little brackets around the numbers mean? It could mean different things for your company, and you need to spend the time looking at your company, exploring it. Get your calculator out, start adding up, start seeing what is a total and what isn't a total. Okay, that's literally what I do with my Mackay students. When they first come in, they say, oh, I don't know. And I'll say, okay, so get your calculator out. Usually it's on their laptops. So start adding these numbers, start making sense of them to you. And that's what the things that we do in our workshops. Okay, there's a whole heap of lines underneath my total CI line. Do I have to enter or restate these? So if I marked your assignment in assignment 1, so students normally enter a whole heap of lines underneath the total CI line, despite the fact that in my tutorial video, I say that you don't need to enter them. So for some reason, students still enter them. I would have given you feedback in assignment 1 saying you can get rid of all the lines under row 121 or whatever it was. So I'm talking about these lines. Okay, so after you get to a profit figure, then there's usually companies will put a whole heap of information about earnings per share. So basic earnings per share, diluted earnings per share, and sometimes I'll give you heaps more information as well, not just about earnings per share. It might tell you, what portions are attributable to the parent company, what portions are attributable to the minority interest, and so forth. So there can be a lot of lines underneath this line. Okay, now if your company has combined the two statements into one, this information will appear at the end of here. Okay, so Wesfarmers hasn't. We've got two different statements. So they put their earnings per share at the end of the income statement. If your company has combined the two statements into one, it will appear at the end of that one statement. It doesn't matter. You just don't need the lines. Okay, that's all the extra info, and students actually enter that in. And I state in the video, in the entering your financials video, you don't need to enter those lines in. We don't need them. You don't need them for the purposes of our unit. And I ask you to make sense of them for me and explain these. What are they? So that's these next two actually tie together. So there's a whole heap of lines underneath my total CI or total profit line. Do I have to enter or restate these? You don't have to enter them, and I would have given you feedback about that as part of your assignment 1. And you definitely don't need to restate them, okay? So if you do have those lines, you can just get rid of them. All you need to enter up to and all you need to restate up to is your total comprehensive income. You don't need anything to do with your basic and diluted earnings per share. So what is basic and diluted earnings per share? So if anybody was listening to my entering the financials, well, I'm sure lots of people were listening to it, but you may not remember. Did anybody actually go through and check out what the difference between basic and diluted earnings per share is? And I did mention it also in the video, but does anybody want to offer me their research that they did about that?
I actually don't remember hearing about it, to tell you the truth.
Most people don't. I cover so much in those videos that a lot of it, you have to rewind and rewatch again. It's in the entering the financial statements one. Anybody remember? Am I mentioning it?
I don't think my spreadsheet had much to do with shares, Maria. So I think mine was a bit different.
That's okay. Some companies actually don't list the earnings per share underneath. Some companies won't list this extra information, but a lot of companies do. So yeah, if yours didn't have it, then you wouldn't even have given it a second thought.
Oh, no, I think mine did have something like that. The cents, the per share.
Yeah, that's the one.
Yeah.
So there's usually two. So your company will usually list a basic earnings per share and then a diluted earnings per share. And traditionally I get quite a few emails about that. So that's why I put it in as a well, I'll put it into my video saying don't enter them because we don't need that in our unit. We actually do get you to calculate earnings per share in your next step, but we don't want you to use the one your company's calculated. We want you to learn about it yourself. And that's why I briefly would just say, you know, if you would like to find out or research the difference between a basic and a diluted earnings per share, then let me know. Does anyone want to have a guess at what the difference between a basic earnings per share and diluted earnings per share is? That's okay. I'll give you my explanation of what it is, okay? So when you come to calculate your earnings per share, the actual ratio itself, it literally is profit divided by the number of shares that your company has on issues. Like that's the formula you'll be using in the next steps in the ratio section of your assignment to calculate earnings per share. So the actual name of it tells you the formula, earnings or profit or comprehensive income we use. So the whole profit your company's made, the earnings per share, so divided by number of shares. So that's the idea. That's the concept of an earnings per share. It actually tells you that for every share, if your company was to pay out all of its profit to every single shareholder, how much would every single shareholder get for every share that they own? So in Wesfarmers' case, they would get $1.71 per share. Now, there are a set number of people who own Wesfarmers shares at any point in time. Okay, and you can trade the shares daily and so forth. And so some of those shares carry options, rights, warrants, which if they are exercised by the shareholder, may actually create more shares. So instead of having, say, 10,000 shares on issue, if those 10,000 shares each had an option to create another share in the future as a bonus option on it for whatever reason, then that 10,000 shares might become 20,000 shares at some point in the future. Now, when you divide a figure by a larger amount, your earnings per share gets a lot smaller. And so we call it a diluted earnings per share, okay? So your basic earnings per share is basically your profit divided by all of the shares that are issued right now. Your diluted earnings per share is your profit divided by all of the shares now plus all of the what if shares if we were to create more in the future. Okay, so it's the profit's divided by a much larger shareholding base. So it dilutes those earnings. And that's why we call it that's why they call it a diluted earnings per share. So that's my understanding and explanation of it. So you can see if your company's shares don't really carry that many rights or options or warrants to create new shares in the future, you might get a scenario like Wesfarmers where the basic earnings per share and the diluted earnings per share is almost the same. Okay, but if your company has a lot of shares which actually do have a lot of options to create more shares in the future, then your diluted earnings per share will be a lot less than your basic earnings per share. So your diluted earnings per share will always be less than your basic because you are dividing the profit over a larger number of shareholders. Okay, so mathematically you are diluting that profit per shareholder. So in Wesfarmers' case, it doesn't make too much of a difference per share. And they always tend to express it in cents. Some companies do express it in dollars. I'm not quite sure why. John, do you know why you've had more experience in that? Why do they tend to express it as cents rather than dollars most of the time?
I really couldn't tell you that, Maria, but you're right. It's almost invariably expressed in cents.
Yeah, I know. It's a bit weird. I've never really thought about that till now, actually. But most of the companies you'll find will express the earnings per share in cents. If any of the teaching team actually knows why, please let me know. Please let everyone know. Some companies do express it as dollars. I have seen it as dollars, so they'll say $1.71, point. So 1.715 or 1.72, they usually round it to. But Wesfarmers has most of the time always expressed it as cents, and most of the companies you'll look at will express their earnings per share as cents.
Maria, can I just ask a question about the diluted
Yeah, sure.
earnings per share? How do they work out if it's based on what shares could be sold in future? How do they work that out?
So all the shares at the moment, it's not what shares could be sold in the future. It's what shares right now carry the right to create shares in the future. So some shares come with different options attached to them when you buy them for various reasons. And back in the day, they used to have different types of shares, not so much anymore. So they used to have different things, like they would have preference shares, which would in some ways almost carry a component of debt or characteristic of debt, because they would be preferred in terms of if a company went bust, those shares might be paid out like a normal bank loan would be, because usually they're right down the bottom and they're the very last ones to be paid out, which is why when a company goes bust, usually it's the shareholders that lose their money. So you can actually get different types of shares, and the shares that are currently existing right now, some of them carry options to create new shares in the future. So they actually know. It's not like, oh, we don't know what we might issue in the future. They don't divide it over those. It's divided over what is known right now. So what shares currently have an option to be exercised. So for example, some employee share plans, those shares issued to employees will often come with an option where the employee can choose at a certain point in the future. So for example, let's just assume shares go up in price. The employee might like to exercise an option to create another share at that point in time. Okay, but they don't have to. It's just an option to, and that share carries that option because it's issued to an employee of the firm. So they get, a little bit of an advantage over a share that's issued on the public market as part of a IPO or the initial public offering to the public. So different shares have different options, different rights, different warrants, different little derivatives attached to them that the shareholders can choose to exercise at a point of future, but they exist right now. The company doesn't include, oh, well, we might issue more shares next year, but we don't know. They don't include that in the calculation. Does that make sense? Did I answer that all right?
Yes. Yeah. No, what you said was good. It's just a matter of me wrapping my head around it. Thank you.
That's okay. And teaching team, please help me out at any time. If you're like, oh no, that just confused everybody more, just jump in.
Hi, Maria.
So yes. Yeah.
Hi, just follow what you just mentioned, that by using the favorite term you used, what if. Now, the student asked about this option, you just mentioned that. There are different likelihood. So we mathematically assign the numbers. If you're sure that as an analyst, this option is going to be taken to exercise, and an option is right, but not obligation. So in that case, most of the senior executive, they have their call. That means they can take the option to buy the shares. If the situation in their favor, then they are going to take. Then the likelihood you are going to assign is from 0 to 1. 1 means 100% sure they are going to take. Then you use the mathematical form we call the weighted average. Use that one to calculate. Then this is, we understand this is a more advanced topic in later accounting learning.
Yes, that's right. Thank you for sharing that. There is, it's almost like doing your provisions calculations. They have a similar likelihood of occurring probabilities, and they will multiply the individual groups by the likelihoods. But it is advanced, so you don't need to worry about calculating that. In fact, it's probably something that's, I guess, I mean, it's all automated. So when you get, if you are ever in that component of calculating it in a company, you will have systems to help you out, and there will be the structure which you'll learn about. The important thing, I think, to get from today's discussion is, what is the difference Know what earnings per share is, because it's a widely used metric in the financial analyst world. You'll hear it quoted in the financial media. You'll see it, like I said, on just about every income statement listed here, even though we don't use it in our unit. The actual metric itself, the earnings per share, is so widely accepted and talked about in the business world. So just being able to understand what's basic and what's a diluted. The fact that shares do come with options to create more shares in the future. They're the key concepts that we'd like you to get out from today. Well, they're the key concepts I would like you to take out from today anyway. As for calculating these, you don't need to know about the specifics. They can be quite complex, especially when you start getting into the likelihoods and the probabilities. When we ask you to calculate this as part of your ratios, we don't make you take the weighted average. Your company does that in calculating this. So when you calculate your earnings per share, you will get a slightly different figure to your company's earnings per share figures. And that's great. We don't want you to get the same figure because they've used in their denominator weighted averages. Okay, we just get you to find total profit, and we get you to find the number of shares on issue at the end of that financial year, and we just get you to divide one by the other. That's as hard as we make it in our unit. And that's simply so that you understand the concept of earnings per share. If a company was to pay out all of their profit to all of their shareholders, how much would every share get? And then we take it one step further in your ratios and we say, but companies don't pay out all of their profit. Well, some companies do, but a lot of companies don't choose to pay out all of their profit to their shareholders. They will retain their profit for future use in the business. Okay, they'll put it back into the business. So the amount that they actually pay out to their shareholders, we get you to calculate as their dividends per share. So there's another ratio we get you to do when we come to the ratios. But you don't need to worry about that for now because today's lecture is just restating. We want you to get your restated financials done because the ratios then are split up between ratios about your originals, your original financials that you entered in assignment 1, and the ratios, there's bottom ratios at the bottom of the ratios page, which are dedicated to your restated financials. So before we even get to the ratios, you've done assignment 1, you've entered your originals. Now in the first steps of your assignment 2, you are actually restating your financials. Once we've got those down pat, then we can start to analyse them with some ratios. Anything else for that discussion before I move on? Okay, so that was a little bit of background. Hopefully that was interesting. So just a reminder about my videos, they're on the right hand side. There are a couple little updates to this slide that I should have sent to Martin, but I haven't, so I apologise for that. So the videos have changed now when they did the Moodle upgrade right at the beginning of term. Videos are on the right hand side, and as Karen pointed out to me, she's pointed out to me 2 weeks in a row now, so I better just say it. There's a little toggle button here that hides your blocks on the right hand side. So if you toggle it on and off, you'll see the blocks or you won't see the blocks. So I always leave mine on, but you need to have it on, otherwise you won't be able to see the study guide or the videos link. And this is where the videos link is. So the one that you need to watch, and it is the longest one on restating the financial statements, is restating your firm's income statement. Now, having said that, it's still under an hour, okay? It's under 45 minutes actually for this year. So the 3 videos on restating the income, restating your financial statements. You had the statement of changes in equity. We looked at that in week 5. Restating the balance sheet. We looked at that in week 6 last week. And this week it's all about restating the income statement. Now, I know a lot of you have already watched that, which is great because you were on a roll restating the others and you have completed or almost completed restating your income statement. But that's the one, if you haven't watched it, that's the one that you do need to watch. So it's 45 minutes of me showing you how to restate Wesfarmers income statements. And there is quite a bit in that. And you'll probably have to watch it over and over and pause and rewind and discuss with your peers a lot. But it is rewarding when you do get to balance that income statement, trust me. So it is in chapter 4 of the study guide as well, and it's the last statement that you will need to restate. I say statement, but remember there are two statements. There's your profit and loss and your comprehensive income statement. Okay, so there's really two income statements. Some companies join them into one, but we just collectively call them as the income statements in our unit. So if you've got your assignments open there in front of you, just open them up and find what I'm calling the bottom line, which is your total comprehensive income. And don't enter anything below that comprehensive income line. You don't need it. Okay, we don't need any of that earnings per share or attributed to the parent and the minority interest. You just need to get to total comprehensive income. Okay, and follow the video presentation. It's under 45 minutes. Now, here's the point when I'm recapping on CI. So I need you to input for me very soon, okay? So what is comprehensive income? And this derived last year, I think, from my use in my videos of just calling it CI. I'll just say, oh, this is total CI, this is total CI. We're classifying CI now to O and F, and students were getting confused because there's actually two different terms for CI. And they mean two different things, and I was using them interchangeably, and it's not right. So I've corrected that since. So your videos this year should be A-OK. So there's comprehensive income as separate from revenues and expenses. Okay, that's what we call other CI. And then there's comprehensive income as profit plus this other CI. Okay, and that's what we call total CI. So there's two different terms. We have other comprehensive income, and then we have total comprehensive income. So other comprehensive income is anything that's not revenues and expenses, but does cause a change in your net assets. So we call that other. So all of those, cash flow hedges, the gains on foreign exchange, currency transactions, all of these lovely babies. So Wesfarmers has remeasurement loss and defined benefit plan, unrealised gains on cash flow hedges, exchange differences and translation of foreign operations, all these lovely terms. That's what we call other CI. So Wesfarmers actually lists that. It says other comprehensive income. Now, these are all of the items that aren't revenue expenses. That's what we call other CI. Then we have total CI, which is our profit figure from our income statement, plus our other CI. Okay, so it's the 5510 in my case, minus, because it's negative, 38, which gives me my total CI of 5472. Now, notice that my company, Wesfarmers, has split up total CI into continuing operations and discontinued operations. Doesn't matter, you don't need to enter those two separate lines in. You can just put total CI as one line and leave it at 5472. Okay, for the purposes of our unit, we only just need that one line in. So that's the line that I'm saying. Once you get to total CI, you don't need anything underneath. So I'm going to go through this again, simply because it is a major key concept. We are talking about CI a lot with restating the income statements, and you need to know what the difference between other CI and total CI is. So here's your turn. I'd really love if you could share your understanding of what CI is, and there's a little box here you can write your understanding in. So I'll give you a couple minutes to write what you think your understanding of comprehensive income is, and then we can discuss it that way, and then I'll move on and continue. We'll just recap what we covered in week 5, just to refresh, because obviously restating the income statements, you have to restate CI. Okay, so I'll give you a couple minutes. I'll stop talking for maybe 2 minutes. You can write your responses in here for me. All right, I'll start going through. I've only got 3 here. That's okay. Okay, so some of your thoughts are comprehensive income is all the income earned by a firm during a given period. The income left after all expenses are accounted for. CI is the cash inflow. It is both the gains and losses on instruments in a cash flow hedge. The income of all possible operating and financial assets, including those built by shareholders, minus the total liabilities and expenses. So we're getting to the understanding of it. Still a little bit hazy. So comprehensive income is a bit more than just the cash inflow. In fact, some of them aren't cash. They've got nothing to do with cash at all. For example, the foreign currency exchanges. Those are just taking the differences in value between some transactions across our boundaries between, you know, 2 different currencies with no cash exchanged at all. I think of total comprehensive and other comprehensive income or losses as the sections that includes all or at least nearly all avenues of income earned during a financial period. So again, we have to distinguish between other and total comprehensive income, because other comprehensive income really is just the items of comprehensive income. Okay, so CI equals other comprehensive income equals all items of comprehensive income, which equals revenue plus expenses. CI equals total CI equals normal profit and loss plus other comprehensive income. So yes to most of that, except for the other CI being revenues plus expenses. It doesn't. Other CI doesn't include. It's everything except for revenues and expenses. Okay, so other comprehensive income or other CI is just the items of CI. So it's just those items on Wesfarmers' balance sheet that come under this heading, other comprehensive income. That's it. That's all of my items for Wesfarmers of their comprehensive income. Now, I explained that my understanding or my explanation of CI was what if we realised some of the value. But that what if isn't just unrealised value. It can actually include realised value. And as you can see, Wesfarmers even tells me that some items that out of this may actually be reclassified or recognised to profit and loss in the future. Some items never will be. There will be some that is just purely a recognition of value in equity. That's all it's ever going to be. Yet both of these categories can still be other comprehensive income. So the definition we're going with in our unit is other comprehensive income is all of the items of value that change the net assets of a firm that isn't revenues and expenses. Okay, so that aren't revenues and expenses. If they're revenue and expense, they go into your income statement. Anything else that increases the equity or decreases the equity or changes the net assets of a firm goes into your comprehensive income statement. Okay, so other comprehensive income, all the items that can change your net, that affect your net assets that they are not revenues and expenses, because if they are, they go in this statement here. That's the definition we're using for other comprehensive income. And this, there are some common items you'll find between your firms. So they're, such things like cash flow hedges. Again, your company uses these for different things. So it could be O or F. Foreign currencies, defined benefit plans, things to do with your employees, your company's employees, and so many more different items. That's our other comprehensive income. These are the items you will have already classified or restated into O&F when you did your statement of changes in equity back in week 5. You will have already classified these into O&F. That's other comprehensive income. Okay, so that's this other CI that the last comment's talking about. So it's everything except for revenues and expenses. This one's correct. Total CI equals the other CI plus profit. Okay, so revenues minus expenses gives us this profit here, okay, which is the same as the final profit figure on my income statement. So that profit, which is revenues minus expenses, profit plus other CI, which is my total down here, will give me total CI. Okay, so that's an important distinction. That's really what we need, the key concept that we need you to understand. As for what is comprehensive income, we're defining it in our unit. It's a lot more than just what if income. The example I give is, you know, if we were to recognise the value of an increase in one of our assets, such as land, we might have purchased land 50 years ago for $20,000, it's now increased in value to $100,000. We recognise that $80,000 in value as comprehensive income. We haven't sold the land, so we haven't actually done anything to the land, but we're just recognising that it's increasing, it's changing the net assets of our firm, and it's also increasing our equity by that value because it's valued at 100,000 instead of 20. So we acknowledge the 80,000 as comprehensive income. Okay, so that's the change in revaluation surplus to our property, plant and equipment. There's so much more. There's so many different items of CI, and you'll come across those items in subsequent units that you do. So expanding on your understanding of what comprehensive income is now, the definition we use in our unit as a basic understanding is anything that increases or decreases the value of your firm, your net assets or your equity, that isn't revenues and expenses, it's other comprehensive income. And again, I've left that link there if you would like to just have, so this link under IFRS box, it goes through a little flow chart which may help your understanding of exactly what is CI and why we're including it on an income statement, because we never used to until fairly recently.
Maria,
so
can
in
I
this
ask
unit,
a question about that, please?
Yeah, sure.
My comprehensive income statement states what I can see is research fees as a positive figure, but it's actually listed under revenue. So why would they say it's revenue? And would I'm not quite sure what the research fees in the notes how it would be related to revenue.
So that could be for a number of reasons, but usually you'll find if you've got the same item in your income statement as well as in your comprehensive income statement, it's actually not the same item. It's the items that used to be comprehensive income from last year that have since been reclassified to the profit and loss statement. So see these items here, items that may be reclassified to profit and loss. Some of these from last year may actually already have been classified to my income statement this year. So I'll actually have the same, well, it will look like they're the same items. They'll be called the same thing. But in this year, this is the amount that's comprehensive income, hasn't hit the profit and loss yet. And yet there could be some that already has hit the profit and loss, i.e. they've become realised. We've actually done the foreign exchange transaction. We've recognised them in this financial year. They will already be counted as revenue. So there are some items that will be reclassified from this statement to the income statement, and Wesfarmers actually tells me that. Some of your companies won't. But there's also items that won't be reclassified, so you'll never see them in the income statement and comprehensive income statement. So it sounds like your company has reclassified, or some of the research fees have been realised in this financial year, so they've actually included them as revenue. But there may be some that hasn't been. They'll be probably realised maybe next financial year. So for those items that they actually haven't realised, they're still recognising that they will bring value, and they put them in the comprehensive income statement. As to what exactly they are, I don't know. I'd have to have a look at your company. But your notes should tell you. Sometimes the operations, so the managing operations reports, will also give you a bit of insight into what those might be. Predominantly, if it forms a larger portion of your income, it'll be mentioned elsewhere in your annual report. If it doesn't form a very large portion of your revenue at all, then it may not be mentioned. So if you'd like, I'm happy for you to join the Mackay tutorial afterwards and we can have an in-depth look at it. So I did that with a couple of students last week. If you've got specific things you'd like to focus on, that's what the tutorial times are for. And quite happy for anybody to join my tutorial, and I'm sure all the staff are the same.
Okay,
does that sort of answer what you were looking for?
Sort of.
So you've got two items, one under the comprehensive income statement and one under the income statement?
No, I think mine's only mentioned in the CI statement, to be honest, but
Oh, sorry, I must have heard wrong. I thought you said it was recognised as revenue.
Sorry. Sorry, the profit and loss statement that it's revenue. And that's, from what I can see, the only place I can see it listed. So I'm not sure why that's why I was asking why they would list it as revenue.
Oh, so it's only listed under your income statement. It's only listed here as revenue.
The other, profit and loss and other comprehensive income statement, it states revenue in 2016 of 50 grand. And when I look at the footnotes, it says it's research fees. And that's the only place that I can see that mentioned. That's the only year too.
Oh, that's okay. So you've just got research fees. So it's got nothing to do with comprehensive income. It's just listed under your income statement.
Oh, sorry. Yes, sorry. I've read that wrong. Yeah.
That's okay. I was thinking, I thought you meant it's under both statements. So which can occur.
No.
Oh, that's all right. Just means you've got research fees as part of your revenue.
Yes,
and if they only occur in 1 year, that's actually, so logically thinking to me, companies should probably participate in research a bit more than once a year, but some companies may have only just had research fees, or they might have only been contracted to perform research in 1 year. So a lot of companies will just have one-off figures in 1 year, and there'll be no figures for any other year. And that's fine too. You can just put 0 in every other year, or just leave it blank.
Yeah.
Just only put the figure in that year.
Okay. Yeah.
Very good. Okay. So in our unit, we want to make sure that we've got other CI as the sum of only comprehensive income items, okay, that are not revenues or expenses. And some of the common other CI items are, for example, what we've been through. And, these are also in Wesfarmers. Total CI is your profit plus other. That's the key concept. Okay, and that's what I was not referring to previously when I was doing your videos, your step-by-step videos. So now I do, so I don't confuse our current cohort. Other CI is just items of CI. Total CI is our profit, which includes revenues and expenses, plus the other CI. And that's how I refer to it in our videos now. So total CI, you'll notice in the video on restating the income statements, is what you need to balance back to. And that's what I'm going to go through now, is some tips and balances. So let's say you've watched my 45-minute video and you've gone through and your total CI doesn't balance. What if things go wrong? Or you go through my video, you follow everything and it balances. How can I check that I've got it right? Well, here's some tips. Okay, so with the income statements, you must identify finance income. I had an email from a student this week, actually yesterday, and she said, I didn't do it when you told us to do it in entering the financials. And I went, naughty, because now you have to do it now. No, I didn't say that. So she said, I didn't do it back then. I had to go through and do it now because I realised we actually need it as part of restating the income statements, which is why I realised you told us to do it back then. So sorry that I didn't do it, but I've gone back now and I've put it in. But I have a problem and it doesn't balance. My total CI is now out by this finance income line that I've added in. So I said to her what she needed to go back and do is just take that finance income line away from a revenue line. So whichever one it was, revenue or sales of goods, she just had to take that finance income away from that revenue line so that her total revenue still equaled the original total revenue. Okay, I said all you're doing is you're just separating out an element of finance income, and I've got a slide about that next, so we will come back to finance income. But if you haven't already done it, you will need to do it now. So there was a reason I told you to do it back in entering the financials. You also have to identify your company tax rate, and I'll go through that again because I do cover it in the video, but we always seem to get a lot of questions about it. Has to be linked. And here's some mathematical checks for you. So your OI, your operating income plus your net financial expenses should equal your total CI in your original financials. And I'll show you why on the diagram shortly. Okay, so they're two mathematical checks that you can do. These won't make sense to you now unless you've actually completed your restating, but they will make sense to you when you watch this lecture again, after you do your restating and it doesn't balance, or it does. So you can always do these checks. And also, we've covered this check in week 5, but your operating comprehensive income and your financial comprehensive income should match the split that you did in your restated statement of changes in equity for comprehensive income. Okay, so the split in your statement of changes in equity, your restated statement of changes in equity, should equal the split in your income statements. So your operating and your financial. And this is the split of other CI. Remember, you're only restating other CI in your statement of changes in equity. Okay, so that split should be the same from what you did in week 5 to what you did now. And for some students, and an increasing number of students actually, that split in your statement of changes in equity will actually have been based on your income statements, because in your statement of changes in equity, you only had one line calling it other CI. And we told you back then, if your company just was lazy and just put one total for other CI, then you had to go and find the matching total in your income statements and split it up into all of those individual items into O and F. So in some cases, you will have already used your income statement other CI items to do this split anyway. Okay, so that will make sense once you've done it. Those won't make sense, probably won't make sense to you right now. I told you we'd come back to finance income. So always get some emails saying, I can't find it, help me, I don't have it, I don't know what to do, I don't even know where to start. So in the video, in entering the financials, I tell you, you need to find it. So it's called various names. It's called, it can be called interest, it can be called financial income, lots of different names. They're the 2 key names though. So when you're doing your search in your PDF document, try some different names. Have a look at the note for revenue, because usually you can find it in a note for revenue. A couple of weeks ago, my Mackay students were saying, I can find it in 2 years, but I can't find it in the other 2 years. And I said, well, it should be in the same note. Usually companies are consistent. And it was. The note was just set out in a different way, but the information was still there. Okay, so it's usually in that note for revenue. Wesfarmers certainly is, so it was very easy for me to show you. But check if you still can't find it. So you look through, I've looked everywhere, I cannot find it, Maria, help. Let's have a look at, is your company likely to have any to start with? It may not. It's very unusual that it wouldn't, but it has happened before. Have a look on your balance sheet. Does it even have cash as a current asset on your balance sheet? If it does have cash, then your firm is likely to have some form of finance income, okay? And you can calculate it if you can't find it. And in the video, I tell you it's up to you what percentage you'd like to apply. A lot of students will just, if they can't find it and they're calculating their own finance income, they will just use the current cash rate, which is pretty low at the moment. So they might just choose an arbitrary rate of, 1% or 1.5%, and they'll multiply their cash at bank on the balance sheet by that 1% or the 1.5% or the 2% or whatever rate they feel like using, justified, of course, and they will calculate their finance income that way. We don't mind how you do it. Whether you find it as a note, we obviously want you to try and find it as a note in your financial statements. Otherwise, you can calculate it yourself based on your company's cash at bank balance or other financial asset balance. So if you can find another item in your balance sheet that looks like it would generate finance income. So if there's something there that says, short-term money investments or short-term money market investments, or something to do with an item that looks like it would be generating you some sort of finance income, then you can use that item. You don't have to use cash. Multiply that by your arbitrary percentage rate. Like I said, a lot of students who have to calculate it use the prevailing cash rate at the time, which at the moment is very low. So multiply it out. So cash balance times your percentage rate equals your finance income for every year. And if you've had to calculate it yourself, you can just write about that in your Word document. Okay. So That's all to do with your finance income. You just need to separate out your finance income because it will make a difference to your split between O and F. And if you don't identify finance income, your marker will respond to you, most likely with a little template saying you can use this template. You'll need to identify your finance income because you won't be able to proceed with next steps of assignment 2 if you don't get your restated financials right, which includes identifying your finance income. So don't skip over this. Make sure you do it. It's an important part to get your split between O and F right. Otherwise, when you do your ratios in the next steps, they won't be right and you'll have a harder time to analyse those ratios because yes, we do ask you to get to analyse them. You'll have a harder time actually making sense of them if you just don't do the preceding steps correctly. So spend the time now. If you didn't do it back when you were entering the financials, when I told you to do it, you need to do it now. Now's your last chance to do it. Otherwise, your next steps will be harder to do. So spend the time. If you can't find it in your company's annual reports or your financial statements, calculate it yourself. Any questions on finance income? Because that's all I'm going to say about it. Okay, the next big point that I always get asked for, in fact, I'm going to spend a little bit of time on the tax component of restating your income statements. First of all, where is my company's tax rate? Okay, it's actually on page 17 of the new study guide for this term. It's still in chapter 4, so if we go back to this right-hand side, make sure your toggle button is on so you can see where the study guide is. Click into the study guide, click into chapter 4 and scroll right down to page 17. And you will see Martin has hyperlinked in there for your convenience. In the second paragraph, right at the end, it says global company tax rates. Okay, these are the tax rates you will need to use when calculating the tax benefits of your firm. Now, I do cover this in the video. I'm just recapping it here. I'm just pointing it out again, okay, because it's another question I usually get asked a lot of, and it just saves a lot of time if I can point it out to everyone so everyone knows it's there. So click into this one and you will get this lovely corporate tax rates table put out by KPMG. They're so lovely of them, and they literally have it for every single year, for every single country that you can really think of. And it will definitely cover your country, okay? So with Wesfarmers, they're obviously an Australian company. So for me, I'm just literally using the same company rate because we haven't changed our company rate forever and a day. For many years now, it's been at 30%. It has been at a different percentage before that. But for your purposes, you'll only need the last 4 years. So we're only just looking at these last columns here. Usually, most of you have got financial years from 2016 to 2019. They're the most recent annual reports that you've got, and for Wesfarmers, that is for me too. So we're just looking at these last 4 years worth of tax rates. So that's where you find it. So again, it's on page 17 of the study guide in chapter 4. And there's the link again, just for your convenience. Now, this is a common question I get. I don't get what we're doing with the tax. Why are we including it twice? I put it in the video, you'll see it goes in as 2 lines, okay? So you have it as a line under O, under the O section, and then there's a line under the F section, okay? So the question is, why do we put it in twice when it's only 1 line in our original financial statements? And I'm like, well, we aren't putting it in twice. All we're doing is calculating a portion that's attributable to financial, and then we just take that portion away from the total tax paid, which we lump under O to start with. Okay, so assuming that your company tax paid is 100%, so it's 1 line from your original financials, and it's 100% of the tax that you paid or 100% of the tax refund that you got. You calculate your NFE, or your net financial expenses, so i.e. that's your F items in your restated income statement, and then you apportion it using that company tax rate that I just showed you on this table here. So you apportion, so you calculate a dollar value for NFE, and then you'll multiply it by your company tax rate, and that's how we apportion the tax to it. So let's just assume that that calculation that we've just done, which I show you how to do in the video, so don't freak out, it's there step by step, comes to say 40%. Okay, so we've calculated a portion that's attributable to F of 40% of the 100%. Then in the O section above, all we're doing is taking that 40% away from the 100% that we've paid. So that what's left over in that section above is the remainder. So we're not including it twice. We're simply splitting the 100% from the original financials into O and F. And we do that by firstly calculating a section that's for the F component and multiplying that by our company tax rate. And then we take that amount away from the 100% that we've left in O. So we end up with a split between O and F. And in this example, 60% goes to O and 40% goes to F of our original 100% from our original financials. So again, that won't make sense to you till you actually do it. So follow through my step-by-step 45-minute video. As part of that, I show you how to split the tax. And all you need to do is just follow through the steps that I've shown you there. If you are wondering why there's 2 lines included, just remember it's not 2 separate. We're not including it twice. We're simply putting 2 lines because we need to split the original tax into O and F. Okay, and that's how we're doing it. So that's all to do with splitting our tax. Now, say you've done it, you've followed through the 45 minutes and you've got to the end and your total CI doesn't balance. What if things go wrong? What can you do to go back and check? Okay, so here's the step-by-step self-fix-it. So again, this won't make sense until you actually go through and do your restating. If your total CI balances, you can still check that you've got it right by doing those 2 mathematical checks that I mentioned before. So checking that your split between O and F of your other comprehensive income matches what you've already done in the restated statement of changes in equity. And again, you can check, so if your total CI balances, you can check that your totals for OI plus your total for NFE, so i.e. the split between O and F, matches your total CI in your original financials. So if you've got it right, there's some checks you can do. And if you've got those right, then you can be fairly confident that you've restated your income statements correctly. But more likely things will go wrong, so don't fret. Okay, it's so common for things to go wrong because this is your very first time at doing it, and that's okay. That's what this is dedicated to. So it's dedicated to you to help you work through and make it go right. If things go wrong and your total CI doesn't balance, and I can almost guarantee you that's what will happen, then go back firstly and just check your tax calculation. Okay, most of the time there's an error that you've made in splitting your tax between O and F. So just check that your O and your F portions should equal the original 100% tax that you were paid or refunded. Okay, so check that your split between F, the 40% in this example, plus the 60% in O does really add to 100%. And if it doesn't, go back through these steps and apportion it again. Check your formulas. Okay, so O plus F in your tax split needs to still match to the original 100% of tax paid. In a lot of cases, you'll find you've accidentally switched your mathematical sign, so it will add to more than your original tax or less than your original tax, which will mean your total CI will be out. So that's the first step. Go back through and work through those steps again. Then start with your O section and go back through each of these 3 sections in O. Now these 3 sections, what are they, you might ask? In the step-by-step video, I explain the sections. So here it is, this is the set out. So what we're doing with restating the income statement is, under O, we've got 4 sections, and under F, we've got 4 sections, and they're exactly the same. So we are just splitting our original income statement into these 2 sections, into O and F, like we're doing with every other statement. We have income, we have expense, we have tax, we have comprehensive income, and we have those same categories under financing. The total for those gives us a total called operating income, and the total for F we call net financial expenses. When I say go back through the 3 sections, I'm talking, so we've already covered the tax. So if things go wrong, start with your tax calculation, because usually that's where students make the most mistakes. Then you'll have to go through each of these sections in O. So go back through income, just operating income, and go through line by line. Go to the original income statement, highlight the line, check it in your restated income statement, highlight the line so you can see where you've linked it across. And don't just check the name, check the number that you've linked to. One of my high distinction students in Mackay couldn't balance her income statement simply because she'd linked everything correctly, except for one line. She accidentally, instead of linking the say row 93, she'd linked row 94. And she was only going back through checking the name. She's like, yes, I've got transferred that. Yes, I've transferred that. You've got to check the name that you've linked, and you've got to check the number that you've linked. Okay, so make sure it's the correct row, and you have to do that line by line. There's no shortcut. So start with income, just the operating income, and I like to highlight it. So yes, I have definitely checked that. It's definitely in this one here. I've definitely checked the figures. It's definitely the same figures in my restated. Okay, I'm sure. Move on. What's the next item of operating income? Okay, find it here, highlight it there. Find where I've put it here, highlight it here. Check the figure. Yes, that's the same figure as that. Because remember, your restated should be linked to this. So we're making sure we've transferred it through linking correctly. So go through your operating income, then go through your operating expenses, then go through your other operating comprehensive income. Okay, so go through each of those 3 sections and go line by line. Check that you have transferred each item across correctly. It is tedious. There are no shortcuts. I can't do it any quicker. A lot of times I find when doing this process with my Mackay students who are in our tutorials, I just find they've included a total. So they haven't fully understood their financial statements and they've accidentally classified a total. So in the videos I always say don't classify headings and don't classify totals. Students usually are pretty good with not classifying headings because there's no figures attached to headings. But students still, after so many years, I've never found a mistake that hasn't, and it's because totals have a figure. Okay, so you just need to make sure in your statements, and I tell my Mackay students usually, highlight it, make it obvious to yourself that this is a total. One of my students actually wrote a little notes column and she would write, this is a total, and she wrote that to herself because there are so many totals in the income statement. If you go through Wesfarmers income statement, there's like, here's a total, earnings before interest and tax, that's a total. Here's another total, profit before income tax. Here's another total. Here's another total, and here's another total. So there's all these totals. So it's very easy to accidentally transfer a total across and restate it. We don't want you to do that because it's not right. You do not split your totals into O and F. You're splitting items into O and F, but you need to know what is a total so that you don't get it wrong when you're restating. So if you have to be like my Mackay student and physically write next to each one of these, this is a total, then do that. Okay, so you don't want to find that you've accidentally transferred a total across. So do that for O, then go back through each of the other 3 sections in F. Now this usually won't take as long because there's usually not many financial components. Often you'll actually only have 2 sections of financing. You'll really only have 1 line for financing income, which is the one, by the way, that you will have calculated if you couldn't find it in your company's annual reports. So in most cases, this will be very easy to see if you've transferred it across, right? Because there's only 1 line item here. Same with financing expenses. That's usually just your borrowing costs, so your loans on your balance sheet. So there's usually only, maybe 2 or 3, if that. So there's not many here that you've got to follow through. So this section will be a bit quicker to do. We already looked at the split for tax. And a lot of times you won't have any financial CI either. Okay, so most of your other comprehensive income you'll probably find is operating rather than financial. But sometimes you might have 1 or 2 items. Okay, so just go through those, make sure that you've linked them correctly across. So it's a bit tedious. If you have gone through all of these steps, I can guarantee you will find your error. I have not seen an income statement that didn't balance after you've gone through each of these 3 steps. So the errors are usually made just quickly or carelessly or accidentally not understanding an item in your original financials and transferring those across. Okay, so once you actually take the time to go back and double check all of that, sometimes you have to air it out there to your peers. So sometimes you need to air it out on the Facebook page and say, look, I have spent heaps of time going back through my O section, and look, I think I've stuffed up in here because of this. Maybe I've classified a total, but I do need somebody to just help me out. Can somebody have a look over it and just let me know what you think? Or you can do that with your feedback as well. You can actually specifically request specific areas for your peers to focus on with the feedback that you are given for this section of the assignment. Because you will learn from helping others as well. And if you've balanced yours, if yours totally balanced right, you might be able to help others. We had in one term, we had a student who was so excited that they got theirs to balance that they were actually just asking students to post their drafts, and they were doing it for them. They were saying, oh, I can restate this. I'm so good at restating. And that's great. We really do want you to help others out, but maybe not to that extent. We still want them to engage in their own active learning journey. Sorry, was that a question? That's all right. Just ask questions if you do have them. Okay, so just keep in mind the teaching team can't check drafts. Okay, so we can't check assignment drafts. It's actually part of university policy. So this is why we've provided you with your peer support and all of the various social media forums to interact with, so that you can go through these steps. There's heaps of support resources out there. There's all my videos, my step-by-step checks, as well as interaction between your peers. And that's really important. It's actually inbuilt into the name of our unit. Okay, it's accounting, it's learning, so how we learn, we want you to engage in active learning, and it's online communication. Even so, more importantly now in the current, COVID climate that we're in. So our unit is not just about accounting, remember, it's about learning and learning how to relearn in some cases, and it's also about online communication. So you need to be, we expect you, as a teaching team expects you to be interacting with your peers. As Martin has put in the study guide, and also on some of, there's a video, one of my Mackay students did a video about interact or perish. You must interact. You can't do this unit as a lone ranger. And ever so right now, it's ever so obvious why. So particularly when you're going through this, your peers will be able to support you in completing this process. So remember the set out, follow the set out, follow the mathematical equations, and talk with your peers. And you will get through restating the income statements, I promise. If you follow all of those steps, you will be able to balance your restated income statements, and you will feel really good about it as well. So without further ado, it's your time to talk to me. So tell me the most important things that you learned, and also tell me what questions you would like me to address in the next 10 minutes that we've got left. So I'll give you a minute to fill those out for me. So at about 1:15, it's 10:14 now. At 10:15, I'll come back and start answering your questions. All right, I will start going through them. So what was the most important thing that you learned today? To identify finance income, to get the ratios right. Yes, your ratios are based on your original financials plus your restated financials. So that's why it's important to get assignment 1 right. And it's also important to get assignment 2 right. And as part of your feedback, your marking team will give you tools to fix up your assignments. So if after all of the support and resources you still submit it with an incorrectly balanced statement, we will help you fix it up. We will tell you what you need to do to fix it up so that you can get it right for the ratios. Okay, so yes, please make sure you identify finance income. If you can't identify it, calculate it yourself. All the checks, and that the most common error is putting in totals, yes, which is understandable. There's so many totals in the income statement. That the tax needs to be split between O and F, very good. And there are steps for you to be able to follow to do that. And how to check whether your restated income statement is balanced and correct. Yes, people like to know, have I got it right? And if I haven't, what can I do to get it right? So we covered that today. There are ways to check restating your financials. Very good. Okay, so 5 coming in. So there's a few questions. Okay, is it common or normal not to have any CI? Yes. Well, I don't know if I'd say it's common, but it's definitely normal not to have any CI. So out of my Mackay students, probably about 30% this term, I would say, don't actually have any CI, any other CI, sorry. Use right terminology here. They don't have any other comprehensive income. They still have total comprehensive income, remember, because it's profit plus 0 other comprehensive income. That gives total comprehensive income, which would actually be the same as their profit number anyway, but using correct terminology. So yes, it is normal not to have any other comprehensive income, in which case in this section here, you will have nothing to check against, okay? And when you did your restated statement of changes in equity, it wouldn't have looked very different to your original statement of changes in equity if you've got no other comprehensive income. So that's fine. Your task is slightly easier than other students. When will lectures recommence covering the study guide rather than focus purely from next week? Okay, so the lectures, so the study guide is written in conjunction with the weekly schedule, and it's all aligned to your assignments. So we're actually analysing the financial statements, and it's actually, so the lectures are aligned to the study guide. So we're actually covering chapter 4 over 3 weeks, because restating usually is considered one of the hairiest, scariest parts of your assessments. So we focus on splitting those 3 weeks into the actual statements that we restate. Okay, but if you're so over restating, or you might have finished restating anyway, we will move on next week to back to study guide material, which again is still aligned to your assignment. We like to interlink everything in our unit. Okay, in my operating income, for example, we'll say currency translation effects have positive value and negative value. That's fine. If it has a positive value in 1 year, enter it as a positive. If it has a negative value in 1 year, enter it as a negative. You can still analyse it in exactly the same way. Okay, so don't be worried if there's positive and negatives. That's quite common, not only for those other comprehensive income items, for your profit in total. So just still go through the same motions. Doesn't make any difference whether you have positive or negative figures in terms of analysing it. I have a habit of overthinking, and as a result, I'm struggling to follow your second video and your third video. Perhaps this is due to the lingo used in my financial statements. I'm very worried about dragging the chain. Basically, I need to review everything from weeks 5, week 6, and today. That's fine. That's normal, actually. And that's what your peers are there for. So ask your questions, air them out, find exactly what you need help with, and ask it on the Facebook page. It's great because you've got other peers, not just from this term, but from previous terms on that Facebook page. And I've seen some responses from one of my Mackay students already from term 1 last year. So they've been on there helping other students out. So use that resource, okay? If you're struggling, use your peers. Your peers are there for support. Also, come along to the tutorials. We welcome you in all of our tutorial sessions. I welcome anybody to join my Mackay tutorial sessions. And remember, the links are on your Moodle page. Zoom into tutorials. Click in any of these links, it'll take you to Martin's blog. Scroll down on the blog and click in the appropriate link of the tutorial that you want to join. They're all at the same time from 10:30 every Wednesday. So come along and join us. Don't be a lone ranger. Last week I even had a Rockhampton student in my tutorial because the Rockhampton link wasn't working for her. So she just jumped into mine. And I've had other students. So last week in the lecture, a distant student, actually it wasn't a distance, it turned out to be one of our local tutorials. They asked a question about the statement of changes in equity that they were looking at the wrong column basically. So we sorted that out before they even had to come to my tutorial. Okay, their local tutor helped them with that. So that's what the tutorials are there for. So if you are struggling, there are lots of support resources out there. Why does restating the income statement have to be so difficult and so complicated? Because we're engaging you on a learning journey of getting to know every item on your financial statements. And remember, nothing worthwhile learning in life is ever easy. Everything worthwhile takes lots of effort. But on the other side, it isn't actually so difficult and complicated. Just sounds like that because it's the first time you're exposed to it. Okay, and like anything, whenever something is new, it's overwhelming at first. The more time you spend on it, the more it will become less overwhelming, less difficult, and less complicated. It's not hard, it's just new. It's just unfamiliar. So take the time, use the resources, use your peers to support you, and you will get through it, I promise. I'm a little behind at the unit at this moment, but does all the videos and Moodle give the information in order to restate the financials? Yes, it's all there, step by step with Wesfarmers. So on that note, we're about to cut out, but please try and complete your restated financial statements this week and join a tutorial session now